Hey, what's going on, everybody? This is Peter here with Real Estate Trends Market Updates. Thanks so much for tuning in this week. This is going to be a shorter episode, but we'll kind of cover a article that came up in Yahoo Finance. I think this is interesting, especially because the most environments right now, you're seeing multiple offers, you're seeing a lot of activity on homes because that inventory is just so tight. So, um, as you go into it each and every month, you always need to, as an agent, see what the inventory is on the market and how much it is over the course of the next 6 months and 10 months or 12 months. And then also look back too. So, in the trends, obviously, even though there was not as much inventory that flooded the market as people thought over the past interest rates went up so high, there wasn't as many buyers because there was so much uncertainty. So the lack of inventory was still there, but the uncertainty was there so much so that it overrode people from jumping in the market. Now people are realizing that the headlines that they read aren't as significant as one may seem. So what does that mean? That means that there's so many articles that so many people read that it's like the world's falling and feds are going to make that world fall because how much the interest rates are increasing, and they're consistently going up. That's going to affect home prices. They're going to go down 10, 15, 20, 30%. We're going to see the worst financial crisis that we've seen in all of our time. So I'm going to hold my chips. I'm going to hold my money until we figure out what's going on. So when we get into this article, this talks about some investors, and obviously investors, a lot of them were either brand new or they had maybe more inventory on the shelf than expected when the feds came and said, hey, we're going to absolutely ruin your day and increase the interest rates significantly, almost threefold in some situations, and went from 2.75 to, above 7 or right at 7. So this is an article that just came out actually today, and it talks about, it's from Yahoo Finance, if I can say that properly. Disturbing trend for real estate investors. Homes sold at a loss. Numbers not seen since 2016, but this booming alternative is open to anyone. So if we read through, it says a recent report, Redfin, reveals that March of 2023, investors lost money on roughly 13.5% of the homes they sold, while only 4.8% overall U.S. homes sold at a loss. Okay, so that was about a 9% difference, roughly, from investors lost to homeowners lost. But let's keep reading. February real estate numbers. This comes after a dire month in February where real estate investors experienced losses of up to 14.5% of homes, the highest rate since 2016, and a far cry from the record monthly low of 2.8% in May 2022. Of course, because low interest rates, the appreciation was so great, you couldn't do anything wrong. The decline marks largest annual drop on record, outpacing the 40.7% decrease in overall home purchases in the major metro areas Redfin tracks. Okay, so the declining marks the largest annual drop on record, outpacing 40.7% decrease overall home purchases in the major metros that Redfin tracks. While these statistics show the notion that buyers and sellers real estate guarantees substantial profits, it's worth noting that investors still enjoy a relatively strong position overall. So that being said, hardest hit markets, it talks about Vegas 28%, Jacksonville, Florida 29%, and this is, let me go back up here. Let's see, hardest hit markets at the time of this report. The hardest hit markets are Phoenix, where just over 30% of homes sold by investors incurred a loss. Okay, so 3 out of 10 people incurred a loss on investors. Then, following closely, Vegas, 28%, Jacksonville, Florida, 20.9%, Sacramento, California, that's where I was yesterday for a real estate conference, 20.2%, Charlotte in North Carolina, 17.4%. So, what does that tell us? That tells us the ones that ran up the highest in the time frame. This doesn't talk about Boise. Boise's another one in Idaho. I got some flack for that on TikTok because I said Idaho's a city, and I was just doing my thing and didn't even really realize that. But obviously, Boise is the city in Idaho. So that's another one that's taken a big hit. Pardon me. So you got to really look at the context of that city or that area, and then apply that to what's going on and what the scenario is for each and every investor. So the ones that ran up the highest: Phoenix, Boise, the California got a hit a little bit because ultimately a lot of people kind of pushed away from California. Obviously, I know that's right next to the headlines of the feds are increasing rates. Overall, you got to look at it as a market per market and also a timing thing, because people, when they're able to buy a house for 2.75% or 3% and they hear that, they jump in. And it doesn't matter if they're in a secondary market or a primary market, they jump in, and that increases the buyer demand, which will reduce supply. So when I'm an investor and I list something on the market, all of a sudden you got a feeding frenzy, because I don't want that house that's old, condition sucks and everything else. I want that brand new remodeled home that I can move into today. So overall, you're going to see the net loss, but as we go on, inventory is still very tight. They lost because they put themselves in a position where they bought wrong, and they just hoped that the market was still going to appreciate as much as it did. And they had maybe too much inventory where they just, they let it out too quickly, or at the same time, or had been sitting on the market for a little bit, and they put themselves in a pinch. And the third one is they just bought the wrong product. It was on a busy street. They thought they, could get it done and get it off the shelf before the market changed, but the market changed, and they end up putting themselves in a bad position. They bought maybe next to, not in a slow area, not an inner track, but a busy area, that type of stuff. So you think about all that stuff as you talk to investors, or you're an investor yourself. Really analyze those deals on where you're buying them and what they make, and what makes sense, what doesn't make sense. Hopefully that helps. Thanks so much for tuning in. I appreciate it. I'm glad that I got to hit one of these articles. I know I talk about the market and stuff like that. My market's blown up. It's in California, Southern California, 10 offers on homes. We just got beat out by a cash offer on a property that went above $1 million. It was listed for $960. Got beat out on it by a cash offer closing 14 days. We were going to close at 21. So that type of stuff. But just be persistent and make sure you can get those properties in escrow. Thanks so much for listening. We'll check you guys next week on Real Estate Trends and Market Updates.